Hi friends, we are starting a face-to-face offline batch in Bangalore with SS Academy. That is for CA Final Financial Reporting paper number 1. Yeah, we'll be taking exactly 2 months from 1st November to 31st December. We'll complete it. It is starting from 1st November 2022. Yes, and in Jayanagara branch of SS Academy, we have morning batch and evening batch will be at Seshadripuram SS Academy. Right, and if the student is missing because of any reasons, right, they are going to get a backup class. All right, we'll ensure that their things, they will study and complete. And from the face-to-face batch, you know the benefits out of it. We'll be completing the syllabus in time. You don't need to postpone and you don't need to compromise for your goals. See you in the class. Please share this information with your friends. That will help me and as well. Thank you. Next, for my books, that is an Ind AS made easy, our financial reporting made easy, and fast track summary book. Yes, you can order in ravikanthmiriyala.com, or you can contact the given number for the books. Right, for your doubts, clarification, please join the Telegram group Ind AS discussion group RKM. These charts are from my book, that is Quick Revision Fast Track Chart book on financial reporting, which is available. You can order it from my website, that is ravikanthmiriyala.com, and it is available in the market. Right, let us look at Ind AS 115, which is very important standard, that is revenue from contracts with customer. Yeah, see, this is basically revenue, revenue in the sense which is arising from the operating activities, that is day to day, which are taking place in the normal course of business. Yeah, revenue is the name but not the income. Income has a big meaning. Okay, income is, what is income? Income is increase in assets or decrease in liabilities, ultimately increase in equity other than contribution by the owners. Yeah, income word is broad, wherein revenue is kind of subset. Right, revenue from the contracts with customer means, first of all, there should be a contract, and that contract should be with the customer. Right, if there is no contract with the customer, if there is no contract and if there is no customer, then the standard is not applicable to you. Right, and that should be with the customer. This is with the customer, you should have each separate contract for each party. Sometimes what happens, we may combine more than one contract into one contract also. Right, this standard is applicable for sale of goods or sale of services, and even for the construction services. Like accounting standard 7, we have separately in accounting standards, there is no separate standard. 115 deals with construction services also and other services as well. Right, and see, if there is no contract, like if there is a, suppose the company is getting a donation, there is no contract. Then company is receiving a dividend income, there is no contract, so dividend income is not dealt by Ind AS 115, and even donation received is also not dealt by Ind AS 115. Right, when you see recognition, how do you recognize the revenue? Yeah, that recognition, it is explained, it is explained in the standard in 5 steps. Yeah, step 1, first we will identify who is the who will identify what is the contract, who is the customer, who is the what are the terms and conditions between these two people, what is supposed to be supplied, what is the amount, correct na? Right, and so many other points are there. That is identification of terms and conditions, basically step number 1. Second thing is, what is the performance obligation, that is what are the distinct goods or services supposed to be, we are supposed to give it, services to be provided, goods are supposed to be sold to the other party. Right, and the third one is, what is the transaction price? Right, and the fourth one is allocation of transaction price among the performance obligations. Yeah, if there are more than one performance obligation and one lump sum amount has been fixed for all the performance obligation, then you are supposed to allocate it. And the fifth one is recognition of revenue when the performance obligation is satisfied. Yeah, there the discussion, it's going to be deeper and deeper. Yeah, let us look at the step 1, which is very simple. As I told you, it is just identifying the contracts with the customer. We will start applying Ind AS 115 only when you satisfy the following 5 conditions. 1, first you should identify what is the contract between the people. And what are the terms and conditions? I mean, terms and conditions means the responsibilities and responsibilities. I mean, responsibilities of the customer, responsibilities of the entity. Both you are supposed to decide. I mean, you have to understand, identify, basically identify the payment terms and the items what you are, I mean, what we are selling, what we are getting, that should be dissimilar. Yeah, that means there should be commercial substance. If the items are not dissimilar, it does not amount to barter also, then it is not covered by my standard, right? And the last one, there is a probable collection of the amount. That means there should not be any uncertainty with respect to collection. When you satisfy all the five conditions, then we will start applying Ind AS 115. Suppose as on today, right, as on today I am not able to identify, then don't apply. Then wait for, I mean, you can review the same contract at later point of time, whether are you able to identify these things. Then we will start applying. Till that date, sorry, the standard is not applicable, right? When you are recognizing, when you are recognizing the revenue, the contract period, which is very important. I mean, contract period is, I mean, it is a period, should be a non-cancelable period. That means where the seller and buyer must have been committed to it. Suppose if it is a free trial period, then there is no commitment. Correct. Now I have taken free trial. There is no guarantee whether I will subscribe to the original software or something, right? So record only, I mean, we will consider only non-cancelable period. That means where the commitment is very clearly given. And if I mean, both the parties can cancel it unilaterally whenever they want, then it means that there is no period is committed. Then obviously the standard is not applicable. If the standard is not applicable, what are we supposed to do, sir? It's very simple. We just follow the accrual system. That means whenever we supply the goods, okay, this month is over, I have supplied this much of goods, then recognize that much of goods as services or sales. That's it. I mean, if I know the period, then we will decide, shall we recognize it SLM basis or some other basis as per the standard we will be thinking. I mean, percentage completion basis and all will come in. If there is no contract period, then nothing will be applicable. Okay, right. Under some circumstances, what I said, I already told, combination of contracts. Yeah, if the contract one or two, I mean, more than one contracts are of similar characteristics, okay, and if it has been negotiated in a single package, and the consideration, I mean, if it is I mean, what do I say, it is negotiation. We have got the contracts 1 2 3 4 5, right, all together in a package, right? That is one. Our consideration is paid for one performance obligation or one contract is depending upon the another contract. That means there is interlinking. These contracts are not independent, these contracts are interdependent. Okay, and the goods or services are part and parcel of single performance obligation. Means, actually speaking, all five things are together is equal to one work, but maybe for the sake of some administration sake, they must have divided into 4 5 agreements. Under those circumstances, we are supposed to club all the five contracts into one contract and treat it as only one contract. Right. Here one more small subtopic is there, when there is a contract modification. Yeah, this we'll learn here, but it will be useful when we see all the entire standard at once. Yeah, there are, I mean, if the contract is been entered now and subsequently there is a change. Okay, now first we should ask a question. Is it change only affecting the transaction price? In a sense, I mean, earlier we spoke for 1 lakh rupees. Now we are changing it, 1 lakh rupees changing to 1,20,000 rupees. Is it only change in the price, not change in the goods or services? That you should ask first. Yeah, if you say yes, it is only changing. Now, what all the remaining goods or services? Means already I have performed, for say example, it is a contract for 2 years. I have performed my job for 6 months. 1.5 years is supposed to be done. Yeah, what is the work I did in the first 6 months and next 1.5 years? Are the remaining goods or services are same? If you say yes, then we will modify it prospectively. If we will modify it prospectively, I will just explain it. Right? No, sir, it is different, sir. Yeah, if it is, are the remaining goods or services are distinct? Distinct. If you say yes, distinct, sir, then if you say distinct, then we are going to modify. That means what you performed in the first 6 months is different from what you are going to perform in the next 1.5 year. Right. Next point. Are the remaining goods or services are distinct? If you say no, sir, both are one and the same. What I have done it in the first 6 months, next 1.5 year, both are one and the same. Under that circumstance, we are supposed to follow cumulative catch-up approach. Yeah, what is cumulative catch-up? I will be explaining. Let's come back to the diagram from the beginning. Is it a modification only with respect to the transaction price? No. It is not just only transaction price. Okay, that means, does the modification, are you adding any distinct goods or services? I mean, are you adding any new goods or services? Yes. If you say yes, now next question, what is the amount are you charging? Is that you are charging SSP for that? If you say yes, then it is, I mean, you are adding, earlier you said 100 goods I will supply. Now again you are saying another 50 goods I will supply. If 50 goods what I am supplying, if 50 goods supplying, you are charging the SSP, standalone selling price. I mean, market rate only you are charging it to them. That means, even though you are modifying the existing contract, we will treat it as a separate contract. We don't consider it as a modification to the existing contract. Right. Again, we'll go back. Right. Does this modification is only affecting the transaction price? No. Right. Does the modification is additional of any, are you adding any new goods or services? No, sir, we are not adding any new goods. That means no distinct goods are added or deleted. Under that circumstance, you are supposed to follow cumulative catch-up approach. Right. Sir, we are adding the goods, but we are not actually charging the SSP. Under that circumstance, we are supposed to account for this prospectively you are supposed to do it. Right. First, what do you mean by cumulative catch-up approach? What is that I am saying? What do you mean by cumulative catch-up? Cumulative catch-up in the sense, see, 30th/6 you have modified the contract and you are supposed to follow cumulative catch-up approach. We'll say from the date of the contract till 30th/6, what is recognized? Take one number. Next, as per the modification, what would have been recognized? As per the modification, what would have been recognized? Are you getting my point? Suppose if this modification happened in the beginning itself, what would have been recognized? Sir, I have recognized 1 lakh rupees so far. If this modification happened in the beginning, no, I would have recognized 1,20,000 rupees, sir. Oh, is it? Then there is a difference. What is the difference? 20,000 rupees. 20,000 rupees recognized as a revenue immediately on the date of modification. On 30th/6 only record it. That is called cumulative catch-up approach. Right. So far what you recognized minus what would have been recognized if the modification took place in the beginning itself. Right. That number you are supposed, cumulative catch-up adjustment, you are supposed to do it. Right. And the second one, what is that? I said modify prospectively. Modify prospectively in the sense, whatever you have accounted for so far, forget about it. Okay. Then what do you mean by, right? Now, what are you today as per the modification? How much are you supposed to receive? Sir, I am supposed to receive further, right? 1.5 lakh rupees I am supposed to receive, right? And what is the work I am supposed to perform? Yeah, I am supposed to perform 1.5 year, next 1.5 year. 1.5 lakh, you are supposed to recognize it over the next 1.5 year. That's all. Our job is done. That is modifying it prospectively. Prospectively in the sense, forget about the past. And remaining consideration is for the remaining contract. Otherwise you can think it like this. I mean, old contract has been cancelled and today, I mean, new contract has been entered for the remaining services and for the remaining amount. Like that you can take it into your mind. That will do a better job, right? And step number two, what I said, it is identification of a separate performance obligation. Identification of separate performance obligation. Yeah, it's a promise. I mean, what is a performance obligation? Performance obligation is a promise to transfer distinct goods or services or a series of distinct goods or services. I mean, it is not happening in one shot. It is happening series. I mean, one after another, I will be sending it. But end of the day, it's a promise to transfer distinct goods or services. When do you say it is distinct? The word, how do you say? When you satisfy, there are two conditions to satisfy. When you satisfy both the conditions, then I say the items are distinct. Items are distinct means customer can use it, can benefit from its own or with other readily available resources. That is the word. Okay, he can benefit on its own or with other readily available resources is one point. Next point, I mean, in sense, I am purchasing A and B, whether these two items are distinct. Sir, B alone will work on its own, or I mean, B does not need only this A. B can work with any other item also. I mean, other item also, which maybe I have already, or which may be available in the open market. I can purchase. It is not necessary that B has to work only with A. Under that circumstance, we will say A and B both are different. Next, goods or services are specifically identifiable. Yeah, goods or services specifically identifiable from other goods or services. Then only we can say it is distinguishable. Then only we will say it is distinct. Basically, correct na? Right. See, why do you bother about this performance obligation? Recognition of the revenue will be taking place at the performance obligation level. Okay, but it is not at the entire contract, because one contract may be having more than one performance obligation. One contract may be having more than one performance obligation, right? It is having more than one performance obligation. Right, that's why whenever one performance obligation has been satisfied, then to that extent revenue will be recognized immediately. That's why you need to know what is the performance obligation. Yeah, then we use the word frequently. That is what is control. When you say control, I have transferred to other party. That means other party has the ability to use the asset. He can use it or he can direct the usage of the asset. Means as per his instruction, someone else can use it. And ability to prevent other entities from the direct to use. Correct. Now that means I have the control. I only can use it. No one else no one else can use it, or no one can direct to any other person to use it. That is what. See, end of the day, we are going to get the future economic benefits from that asset. Then I say it is. Then we have transferred the control. Right. Let's get into step number 3. That is determination of transaction price, TP. Right. What is transaction price? Transaction price is an amount of consideration where the entity is entitled to. Right. What is my entitlement? Right. I may be receiving along with GST, but GST is not my entitlement. That is government entitlement. I am just an agent to the government. So that's why that number I am not supposed to consider. Next, this TP may be including the variable consideration, time value of money, barter system, and it may be sometime what happens, we will only pay some money to the consideration, like cashback offer, or we may give a gift voucher. Correct. So many offers are there nowadays. Right. Let us look at each item. When I say variable consideration, yeah, when I say variable consideration, there may be quantity discount, there may be price discount, there may be cash discount, correct? There may be price concession amount, so many different things. So see, your total transaction price may vary because of these discounts. Today you say it is 1 lakh rupees. Tomorrow you may give a discount of 10,000 rupees, then the transaction price comes to 90,000 rupees only. Okay, that is the reason. I mean, that may vary. That's the reason that may vary. Since it is variable, you are supposed to have an estimation. Sir, how to estimate it? These estimation methods are exactly same as Ind AS 37. That is, there are two methods. One is expected value method, and the next one is the most likely outcome method. Expected method means you have to consider all the probabilities. The weighted average of probability will be considered as your transaction price. Most likely outcome, right? If you decide, like, if the situation is yes or no, right, will he take the discount or will not take the discount, right? Sir, most probably he will take it. Then that's all, consider it. Here, when you are following the single most likely outcome method, then there is no probability application here, no further probability application, yes or no. Under that circumstance only you are supposed to apply it. But when you are doing this estimation, right, you should be very careful. I mean, you should go by conservatism basically, right? I mean to say, Today you are recognizing, as per my estimation, 1 lakh rupees I am recognizing, sir. Okay, excellent. But tomorrow, actually, what happened? You gave a discount, higher discount than expected. Now your actual income is equal to 95,000. That means the 5,000 rupees what you already recognized, is it supposed to be reversed? Yes, that should not happen. That means if you want to give more discount, I mean, in the place of 95,000, you want to recognize 93,000 also, okay. But your estimation should not lead to significant reversal of what you have already recognized. Suppose in the current year I recorded 90,000. Subsequently, I realized that 95,000 is my income. No problem, here 5,000 rupees you record in the next year. People are happy. But recognizing 95,000 in the first year, reversing the 5,000 in the next year, it will hurt people. Okay, that is what we don't want it. Okay, so your recognition should not lead to significant reversal. That you remember. It should not lead to significant reversal. Yeah, we have given some information about volume discount, price concession, price protection, and different that is basic thing, right? Let us get into barter. That is topic number 2, right? So when I say barter system, that is exchange of dissimilar items. True, right? So what is that? Here it is a sale of goods, my dear. So what you get the consideration is what? TP. You are deciding the TP. That's why the fair market value of the consideration what you have got, that is supposed to be taken. Fair market value of the consideration received, that you should consider. Sir, I can't measure the fair market value of what receiving very clearly, sir. Then you can take the fair market value of what you are selling, right? That can be considered. If you can't, but see, the first priority should go to what you received fair market value. You should take it. If you can't measure that, then only you should go by this, right? Next, the topic number 3, I should say, time value of money, or people call it a significant financing component. Some people call it as deferred credit period. Yeah, so when the credit period is more than 1 year, yeah, then yes, this concept will be applicable, right? If it is less than 1 year, then we can, as a, what do you say, a practical expedient, we can ignore it. We can ignore it in the sense invoice value only will be considered as TP. We don't do any modification to the TP. Okay, right? So if the credit period is more than 1 year, then we will say there is some interest element in it. There is some financing element in it, right? So the difference between the cash price and the invoice amount will be considered as a interest element, and we are supposed to calculate IRR in this case, and your interest expenditure is supposed to be correct. Interest expenditure is supposed to be recognized using the IRR rate. Okay, IRR rate will be the discounting rate normally. But remember, you should be very careful with respect to the significant financing component. This financing component, same rule will be applicable. Suppose if you have received something in advance, if the company has received something in advance, yes, even under that you received in advance, wherein we are going to supply the goods after 1 year. Under that circumstance also, we will say there is an interest expenditure. Yeah, what do I say? There is an interest expenditure. Yes, I mean, it is like you have taken the loan from the customer, right? But you should be very careful, right? Say example, my IRR rate has come to 14%. How much it has come? 14%. But wherein my incremental borrowing rate, that means if I go to a banker and ask for a fresh loan, banker is going to give me a loan at 10%, then recognizing 14% of interest income does not make any interest expenditure, does not make any sense. Correct? Because under that circumstance, you are supposed to consider the 10% incremental borrowing rate only. Next, sir, I have collected, suppose AC maintenance, sir. AC maintenance, I have collected from the customer for the 3 years in advance only I have collected, sir. So is there any significant financing component? I will say directly no. Why? Because I am collecting it for the 3 years before. I mean, so that we can provide it at a cheaper price and we can give it a competitive price. Under those circumstances, this significant component is not, that rule is not applicable. Okay, next. If the consideration is paid or payable to the customer, that is like customer loyalty program. What is this? Customer loyalty program, wherein like cashback offer, some coupons, vouchers will be given to the customers. then what are you supposed to do? That value of the coupon, value of the voucher, value of the cashback is supposed to be reduced from the total sales value. Supposed to be reduced from the total sales value. Correct, na? Right. So now the question is, sometime what happens? Customer also may be supplying some goods to the maybe supplying goods to the seller. Under that circumstance, right? Under that circumstance, whatever the goods we are purchasing, correct na? Are we paying at fair market value or above fair market value? Sorry, we are paying at, correct now, we are paying at normal fair market value only. Then whatever the goods purchased from the customer, we will recognize it as a normal purchases. That's all. Suppose we are receiving some services from the customer, the fair value of it is equal to 1 lakh rupee, but we are paying 1,20,000 rupees. Our 20,000 excess is there na? 1 lakh will be recognized as purchases. E 20,000 excess will be reduced from our sales. It will be reduced from our sales. That is the simple point. Step number 4 talks about allocating the transaction price to the performance obligations which are mentioned in the contract. Right. See, the main objective is we wanted to allocate it in the ratio of SSP of each contract. Yeah, SSP, that is standalone selling price. If you independently sell that one item, at what price you generally sell it? That amounts you are supposed to take individually. That ratio you are supposed to allocate the entire transaction price. Right. If suppose, sir, I don't know, I'm not selling it independently. If the SSP is not observable, I'm not selling it like that. Under that circumstance, you have only one choice where you have to estimate it. Yeah, estimation, there are few methods are available. Right. First method is adjusted market price. You can take, if it is getting sold by any other competitor or somebody, what is their price? Then you can add plus or minus, because your brand will be different, your cost may be different. Then you can do some additional margin you can increase. Accordingly, you can say, if I had sold, I would have sold at this amount. Right. Second one is expected cost plus appropriate margin. You can determine, if I manufacture, these are all my costs, these are my raw material overheads and etc. plus my margin amount, you can determine like that. And the third thing is residuary approach. Residuary approach, it is possible when, suppose in a contract there are 3 performance obligation, 1, 2, 3. 1, 2, you have got observable SSP is available. Third one, you don't have observable SSP. Under that circumstance, we can say SSP of the third one is equal to total transaction price minus selling price of SSP of the 1 and 2, you are supposed to take it. SSP of 3 is equal to total transaction price minus SSP of 1 and 2 if you take it. See, we can apply in one contract only combination of these methods. It is not like for the entire contract you have to apply only one, not necessary. But remember one thing, when you have derived some numbers, our numbers should be nearer to the SSP. If you have sold it independently, at what amount you would have collected. That is the main goal, that is the objective of it. Suppose if you are selling one item, sir, I will not sell to every customer at one rate, sir. I may be selling for 10,000 to 12,000 rupees. Yeah, for one customer I will sell 10,000, for another customer I will sell at 12,000. And the quoted amount in the invoice is in between 10,000 and 12,000. Need not be exactly 11,000. If it is in between 10,000 to 12,000, then you can consider. If it is within the range, you can take that itself as SSP. I don't have any issues. But the total transaction price has to be allocated in the ratio of SSP. That you remember. Next, allocation of discount. Right. Generally, if any discount is there, that is not specifically related to any one performance obligation, then this discount will be allocated to all in the ratio of your SSP. Right. If you say no, sir, this is, I am selling A, B, C. B alone, generally if I sell it also, no, I will B and C if I sell it, no, I will give some discount, sir. Oh, is it? Then under that circumstance, your total discount amount, the total discount amount, you cannot allocate it to A, B, C in a normal SSP fashion. You have to specifically allocate it to B and C. Then only you have to check it further. That's why allocate the rate of SSPs except allocate to the specific item. When entity sells regularly on B and C, I'm selling it on individual, on the standalone basis, and I'm selling it at a discounted price. Right. So discount given on the total is substantially same. Discount given when you have purchased A plus B plus C, what is the amount of discount I have given? What is the amount of discount I have given? That is the same amount approximately. That is the same amount approximately. If you have sold only B and C, under that circumstance, discount should be allocated to only B and C, but not to the entire contract. Allocation of variable consideration, you can have a look at it. Yeah, change in transaction price. Change in the transaction price, right? Earlier we have decided as 1 lakh rupees. Now we have decided as 1,20,000 rupees. Now 20,000 or it may be 80,000 rupees. Now how to allocate that? Yeah, how to allocate it means it should be in the SSP ratio. SSP not on the date of modification. Initially, what was the SSP? That ratio only you are supposed to allocate it among the things. Sir, out of A, B, C, what happened? No, A is already performed, sir. My performance obligation, I have satisfied. I have done my job. Okay, then it is job already satisfied. But still now new amount has come 10,000 rupees. Record it immediately. Record it immediately. Right. And if you say the change in the transaction price is purely related to one or two performance obligations, then you please allocate it. Allocate it to only that performance obligation, and when that is satisfied, you should recognize that part of revenue. Right, exactly, that's all. Right, next, step number 5. Step number 5, I said it is bit crucial, it's very important. Recognize the revenue when entity satisfied the performance obligation. Perfect. So when control of goods or services, when do you say control of goods or services are transferred? It can happen in two different types. One is at the point in time. At point in time is at a specific point of time, everything control is transferred in one shot to other party. And the second one is over time. Control is transferred over time. That means it is not happening in one shot. It is happening over a period of time. Right. Under that circumstance, we will be following percentage of completion method. Revenue will be recognized in percentage completion method. Right. Sir, when do you follow this? When do you follow point in time? Right. When it is not percentage completion method, that means when it is not over time, then we will say it is point of time. Okay, point in time. Right. So when do you follow this percentage completion method? There are 3 conditions. If you satisfy any one of the conditions, then we are supposed to follow percentage completion method only. The first one, yeah, customer is receiving and customer is simultaneously enjoying the benefits of the services. Yeah, like service contracts or something, I am supplying, they are taking the benefit immediately. Under that circumstance, you have to follow percentage completion only. And the second situation, yeah, performance means my performance is creating or enhancing an asset. Yeah, an asset to the customer. I am providing services. I'm providing services to the asset. I'm creating an asset for him. This asset is under the control of the customer. That is under that circumstance also percentage completion you are supposed to follow. And the third condition has sub points A and B. You can satisfy third one only when you satisfy A and B. Yeah, A is what? Performance does not create an asset with an alternative usage. In the sense, I am doing something, I'm doing some service, I'm manufacturing one item. This item I can't sell it to anybody else. I have to sell it to that customer only. Right. That is one. That means it is specific, as it is a customized product. It is as per the requirements of the customer. It cannot be sold in the market in general. Plus. And the second condition also you are supposed to satisfy. Entity has an enforceable right to the payment for the work done. Right. So I have done work 50% of job. Now 50% of the money. 50% of the money when I am referring, it is not just only the cost. Cost plus appropriate margin also I am supposed to able to get it as per the contract. Under that circumstance, then I say, correct? Then I say, yes, it is, what do you say? We will go with percentage completion. Otherwise, in all other circumstance, point of time. That means when the control is completely transferred to the other party, that day only you are supposed to follow. Okay, sir, we are following percentage completion method. So how do you determine the percentage completion? See, this percentage completion, there are basically two methods are available. One is output method, the other one is input method. Input method is nothing but cost method, we should say. See, the percentage, whatever the method you are going to calculate, the goal, the objective of this is it should depict the performance. I mean, it should depict the performance what is exactly transferred to the other party. Means how much work really we have provided to other party, that percentage you are supposed to derive end of the day, right? Output method is prioritized or encouraged, I should say, right? How do you calculate? Very simple. What is the value of output you have given to the customer divided by total output what you promised into 100, then you will get percentage, right? But sometimes what happens, this output method may not make sense. Suppose I made goods, 100 goods the customer wanted, 100 goods I made it ready, my job is really done. But if you say it is supposed to be delivered to other party, but as on 31st March only 50 goods have been transferred to other party, then I am supposed to recognize only 50% of revenue, correct now? But my job is actually done, right? I have done 100% of it. Just delivery is not done. Just because delivery is not done, my job is done. Still, I am supposed to follow. Still, I am supposed to. Still, I am supposed to. I have to recognize only 50%. Sometimes it may not make sense. Under that circumstance, better you go with input method. Input method is nothing but based on the cost. That's what cost incurred till date divided by total cost for 100%. 100% contract cost into 100 you should apply. All right. So in this concept, obviously, what is that? What are the cost you mean? What are the resources consumed? That is raw material, power, overheads, labor, everything directly attributable to the contract. You are supposed to allocate it, right? I mean depreciation, etc., etc. We have given list which all the contracts, which all the costs that are supposed to be included, which all the cost that should not be included, right? Let us look at some specific points which are given. Some specific guidance is given by the standard, right? Consignment, as you know, when the goods are actually sold to third party, then only you are supposed to recognize it, then only control will be transferred to other party. Second point, bill and hold, right? Goods are with me but we are billing it, still you can recognize it when you satisfy the following four conditions. One, the reason must be substantive, means why are you correct, why have you not sent the goods to other party? It must be at the request of the customer and the reason must be substantiate, then yes, you can record it. Separately identified, yes, these goods must be readily available, physical readily available, packed, identified, everything done. Just we are waiting for the party. If he sends the vehicle, we will ship it immediately. There is nothing pending from my side. Then next, these goods I cannot redirect it to any other customer. That means control is actually transferred to the other party. Then the third one, customer's acceptance. See, customer acceptance, generally what you say, when you receive the customer acceptance, that day only you record it. Suppose it is, I mean, we have produced the goods, we have provided the services as per the agreement. And if the customer acceptance is just a formality, if you say, then even though as on 31st March, if you have done the job as per the contract and not received the customer acceptance till date, still you can recognize the revenue immediately. That is the point. Sale with a right to return. Okay, yeah, I sold goods, but the customer has unconditional right to return the goods back to me. Under that circumstance, to what extent goods can come back, that on estimation basis, don't recognize that. Suppose I sold 100 goods, I'm expecting 90 goods, 10 goods may come back. Then recognize the sales only to the extent of 90%. But to the extent of another 10%, you must have already received money. That money you recognize as a liability, like an advance received from the customer, right? And the goods which are in the hands of the customer, you have to supposed to recognize it as inventory with third party. Obviously at cost you are supposed to recognize it. Subsequently, if you refund the money, then no problem. Liability account will be debited, that is advance received from the customer will be debited, to cash you will give it. Inventory will come to my physically handy, correct? That is normal. That is about sales with right to return. Yeah, and next point, warranty. Generally if you see warranty, our mind will go to Ind AS 37, provision for warranty, correct? But the point is here, I mean, can the customer purchase the warranty? Right, nowadays, if you purchase mobile, along with the mobile, you can, I mean, generally warranty, manufacturer warranty 1 year. If you want more warranty, they will give you 2 years warranty, 3 years warranty, extra money you are supposed to pay. Under that circumstance, there are two performance obligation. One is sale of the mobile plus sale of what? Sale of warranty. Sale of warranty will be treated as a separate performance obligation. Okay, the customer must be having a choice. Suppose you say customer does not have a choice, we will give only 1 year warranty. Then that warranty provision will be provided as per Ind AS 37, nowhere else. Right. Next small point is principal versus agent. Right. So whether are we the principal, are we the agent, that you are supposed to decide. Because if it is if you are principal, will recognize the sales and expenditure. That is called recognizing at gross. If I am an agent, I will be recognizing at net. That means what is my commission, that only will become my sales, not the total amount I am receiving on behalf of somebody is not my sales. Yeah. So they have given some indicators with respect to agent. Yeah, agent, you can say agent. Okay, right. Another party principally responsible to fulfill the promise. Right. That means I am agent. I am not responsible. Right. No risk of inventory. I mean, if something happens, any loss to the inventory, I mean, expiry date or something like that, I am not responsible. That means I am an agent. And I am. I mean, there is no direction on fixing prices. I mean, I can't fix it. It is fixed. It will be fixed by my principal. Then I am agent, obviously. Right. And if there is any credit risk with the customer is also dealt by my principal. That means that guy is principal, I am agent. But anyhow, whatever we spoke is not exhaustive. It is just, I mean, these are all the indicators, correct? These are the symptoms generally. That's it. Next, non-refundable upfront fees. Correct. Non-refundable upfront fees. If you join any club or something, you will be paying the money. Right. Yeah, the club should not recognize the entire amount as a revenue immediately, because there must be some services where the club will be providing it to the customers over some number of years. Right. That's why recognize that money as a liability advance from the customer, and in the ratio of the goods or services what you will be providing as per the contract in the future, in that ratio you are supposed to transfer. That will be right. That will be, I mean, you can identify it, and obviously estimation is supposed to be done accordingly. We will do it. Right. But you should not transfer it to P&L immediately on account of receipt. Right. Next point is licensing. Yeah, with respect to license of an intellectual property, the point is here, is it a right to access or is it right to use? Okay, I mean, right to access in the sense control is with the company. Yeah, we are providing an access. I mean, database is with me, customer can take an access. Right. Then we will generally follow the over the time period. I mean, recognize the revenue over the time. Suppose, yeah, he paid for subscription 4 years. That means total amount paid divided by 4 years. That's all. And it is right to use. Right to use in the sense we are purchasing some tally software. That is a right to use. Yes, it will be recognized. It will be installed in my computer, and I will use it whenever I want it. Under that circumstance, actually, there is a transfer of control took place at one point of time. Then recognize it as sales. Here SLM will not be working. Yeah, sales based on the royalty. Yeah, recognize the royalty when you satisfy both the conditions. What are the conditions? Subsequent sale. I mean, we said like say royalty on books. When the sale of books happens, that time I should recognize the royalty. PO has been satisfied fully, correct? Performance obligation has been satisfied fully or partially, then that is also. Yeah. Then we are left with another two small points that you can actually run through. Right. Next, one more point, important point, that is service concession arrangement. Service concession arrangement, which is like BOT agreement, build, operate and transfer arrangement. In this case, what are we supposed to do? Yeah, operator. See, grantor is the government. We are the operator. We have got the contract from the government, and we are doing the job. Right. See, we should not recognize the PPE. Suppose I am building a road account debit. No, road is not mine. Right. So what are we supposed to do? Whatever the consideration we are receiving, first that receiving consideration, you are supposed to conclude it and you are supposed to bifurcate it. right? If I construct a road for somebody else, then how much I would have charged? That amount will be treated as what is that? Ind AS 115 revenue. Exactly, that means amount received, account debit. Amount received means, are you receiving the money? If you receive money, then cash account debit. Or if you are going to receivable, then you say account debtors account debit, right? Sir, they will not pay me money, sir, but they will give me a right to use this. I mean, I can like I can collect the toll or something like that, right? I am getting, then it is an intangible asset. Intangible asset account debit to sales. Sales will be dealt by Ind AS 115. This intangible asset, it is an intangible asset which will be amortized over the period of your contract, as whichever the fashion, as per Ind AS 38, which makes more sense. That's it, my dear. I would like to close it, right? Thank you very much. If you feel this video will be helpful to your friends, please share it with your friends, right? And thank you. Wish you the very best.